Welcome to another Farming in Ohio with Chris Bruynis. Today we're going to be looking at hobby farms. What are they and how do they affect your tax structure? So stay tuned. Welcome to another episode of Farming in Ohio with Chris Bruynis. Chris, it is a pleasure always talking with you.
Well, it's a pleasure to be here, and I serve Ross County as Ag and Natural Resources Educator, and it's always a pleasure to be able to get beyond the boundaries of Ross County and teach to a broader audience, and so I always enjoy this opportunity to come and talk a little bit about some of those farm management topics that I enjoy teaching about, and sharing that beyond the boundaries of Ross County.
100 years ago, and no, I did not live 100 years ago, but it seemed that you were either rural or you were living in the city. And in the rural area, it was nothing but different farms. Some were larger, some were smaller, but most individuals made a lot of money or made their living off of their own specific farms. Today, we see farms a little bit differently.
Yes, farming has changed dramatically over the years. Going back 100 years ago, or even 50 years ago, when I can remember as a young child, most of the farms around us were very similar in size. It had grown even when I was a child, more in that 500, 600 acre size. And most everybody had some livestock, had some row crops, and we still looked very similar across the agricultural landscape. And now we fast forward to today, and we have some very, very large farms farming lots and lots of acres, or very, very large farms with lots of livestock, whether they be integrated hog production. Even our dairy farms, which I grew up on a dairy farm, we milked 80 cows. That's small for today's standards. Most of our dairy farms now are 500 plus cows. And so, yes, the agricultural landscape has changed, but what has also happened as we have these large farms getting larger, the people that are entering agriculture and buying 5 acres, 10 acres, 20 acres, and then growing a product there, whether it be honeybees or whether it be chickens, or there's opportunity there for those folks. And a lot of times I get the question of these entrepreneurs that may have a job in town and they have some land and they want to grow some agricultural produce or products and sell. What am I considered in terms of the IRS? Am I a hobby farm or am I a farm? And so I thought
Well,
I would address that topic today.
okay, I when you say hobby farm, coming from a business background, when we start out a new business venture, they always call that being a hobby. Is that similar to hobby farms?
Absolutely. It's a lot of our non-agricultural business may start out as a hobby, baking cakes in your kitchen when the kids are little, and then as you get older, the kids get older, you might turn that into a full-time business. And agricultural production is very similar, with one exception. The IRS's stance for people entering agriculture or farming is that you are a business until proven that you're a hobby. And it used to be, and I've got some slides that walk through that in terms of what they look at. And so from the get-go, if you want to say I'm doing this with a profit motive and I'm going to be an agricultural business and file a Schedule F, the IRS is right there with you. They will say that's fine. But then if you do nothing but have business losses for a number of years, then they're going to come back and say, well, if you never make a profit at it, it's probably a hobby, and disqualify you as a business. And so I just wanted to throw some slides up first, some pictures that I've taken. Is this considered a farm? Here's a business that's starting some trees in the back and some other perennial type plants in the front. And so would this be considered a farm? In terms of the IRS, this could be considered a farm. It doesn't meet our traditional mindset of what a farm looks like, at least those of us coming from agriculture, but this can be a farm.
If you are selling a product and making some profit, it is not necessarily a hobby farm. Or is it a hobby farm?
No, it starts out as a business, and only when the IRS disqualifies you of being a business does it become a hobby. And the tax codes changed a few years back, and I'll get to that in a future slide. But now I have another picture here. This individual is selling cheese. And so even though that's an agricultural product, this would be considered a Schedule C business and not a farm business. Now, this particular picture, I know this farm, and they also milk the cows that make the cheese. And so the farm business is the milking of the cows, and they would have to sell the milk to themselves, ideally for tax purposes, to the cheese manufacturing part of the business, which is not a farm business. And so again, once you start processing things away from its raw product, it is harder to consider that still a farm business.
Schedule F is a farming operations. Schedule C is what?
That would be any other sole proprietor business. And so just a different tax form. And so if I'm operating a business where I'm selling cakes, we talked about earlier, or I'm a plumber, I'm an electrician, I fix furnaces, any of those things would file Schedule C. And so the F is just for the farm industry. So I got a few chickens here. Is this a farm? It very well could be. With the price of eggs, and I picked this one very intentionally, with the price of eggs above $5 a dozen right now, I have a lot of questions. Can I get some chickens? And a lot of people get into that, and then all of a sudden they figure out they can't eat that many eggs, and so they'll start selling a dozen here and a dozen there, and according to the IRS, those agricultural sales need to be claimed. Now, if it's cash transactions, a lot of times it doesn't get claimed, but it should be, and then I'm considered in a farming business.
Let's suppose I sell eggs and I make a profit of $100. What schedule would I use that on?
That would be a Schedule F.
F. Okay. All right.
That would be a Schedule F because you're not processing the eggs, you're packaging the eggs, but you're not processing them. You're not changing them from one form to another, like milk to cheese or milk to butter. That's actually changing the product. And so eggs are eggs. They come out the chicken that way. And yeah, you might clean them up, you might put them in a carton, but you're not processing them. And so that could be. Now, is this a farm? A lot of times we'll buy a property that has a barn on it. That doesn't make it a farm if there's no agricultural activity happening on that property. Then it's not a farm, even though it may look like a farm or it once was a farm. But if the current ownership has no agricultural practices going on, it's no longer a farm. So let's talk about hobby farming here. As an agricultural production has shifted. We already talked about that. We have a number of smaller farms increasing, especially here in Ohio, where we're kind of on that edge of the people belt and the corn belt, if you will. We see lots and lots of entrepreneurs work off the farm. They like the lifestyle. They want to generate some cash flow. And so we have a lot more people engaged in farming activities. And if those activities are pursued primarily for personal use or personal benefit, then we're a hobby and we probably shouldn't try to be a farm. But if we're engaged in this activity and we want to make a profit, then we need to start out a farm. And I'm going to talk about ways to communicate with the IRS that says, yes, I am a farm, and here's why I am a farm, and here's my profit motive. But again, if we go back and we say, you know what, I don't have a profit motive, I'm doing this raising a garden, I'm giving it to the food bank, I'm handing it out at my church. That's all for leisure. It's for your own pleasure. Don't try to be a farm, I guess is the question there. If I want to go down the route of being a farm, then I need to have that profit motive.
Do you have to live on a farm uh, to be able to use Schedule F?
No, location is all about what I sold, not how many acres I own, not does it look like a farm, does it have a grain bin, does it have a barn? It's all about what I sold. And so, as long as I'm selling agricultural products and I have a profit, a potential of a profit, most startups don't have profits the first 2 or 3 years, and the IRS understands that, and that's not a problem for agriculture either. But if we go 5, 6, 7, 8 years and we're still writing off losses and using that to shelter our off-farm income, then they're going to say, no, that's not a farm, that's a tax shelter, and we're not going to allow that.
People that go to farmer markets, are they considered, where they sell products, are they considered Schedule F?
Absolutely. If they're selling an agricultural product. Now, the baked goods that you might find at a farmer's market probably don't qualify for Schedule F treatment. But any kind of agricultural product, whether it's selling beef, pork, fruit, vegetables, honey, any of those things are definitely considered agriculture. And so really the tax treatment differences, and I really wanted to get on this earlier in the conversation here, because if I'm a farm business and I have a net business loss for whatever reason, whether I'm a startup, it's not uncommon that we had more investments than we have income that first year or 2 or 3, I can deduct my tax liability with those losses. So if I have off-farm income, I can take that Schedule F farm income loss and put it forward to my 1040 and deduct that, so it would reduce my tax liability. Now, if I'm a hobby farm, I cannot do that. And so let's say I start a new hobby and it happens to be agricultural production, and I have losses. I spent more than I sold. That's just unfortunate. There's nothing you can do with that. You'll still have to pay the tax liability on the income that you generated from that without being able to deduct any of the expenses. And so there's clearly a tax benefit of being considered a farm. But like I mentioned earlier, the IRS considers you a farm right out of the gate until you have enough years of losses that they say, you know what, you're not a farm. Prove to me you're a farm. And so, the burden of proof is on us to do that. And I'll go through what they look at. So if we wanted to find a defensible position as a farmer, here's what we need to know. Yeah, through COVID, there was some government, we call them subsidies, if you will. The ARC and the PLC payments on land. We're not going to be eligible for them if we're not a farm. And so, if we want to be eligible for those, we have to be a farm. And there's different programs have different sets of rules. But again, the non-farm agriculture enterprises would not be eligible for those subsidies. But it used to be if we were a hobby farm, we could deduct our expenses up to the level of income. So we would have a net sum game of 0 of being in this hobby occupation of agricultural production. But back in 2018, when we had the Tax Cuts and Jobs Act, it basically eliminated the miscellaneous itemized deductions where we would have put that. And so again, now we have a, a, hobby agriculture enterprise or a hobby farm. We still have to claim the income, but we don't get to claim any of the tax expenses that would be eligible. And therefore, I'm arguing that we want to be a business farming enterprise so that we can take full advantage of the tax advantages that we can have. Because as a farm, we are on a cash accounting, not an accrual accounting basis, which means we have to claim income as we get it, and we claim expenses as we get it. We don't have to claim income for anything we might have on hand that we carry over from one tax year to the next. And so I think about my farmers out there growing grain. They may have a bin full of grain that was produced in 2022 that they're going to sell in 2023. That income gets recognized on their 2023 tax return, not on their 2022, the year that it was actually generated. And so if we're on an accrual tax basis, we have to take all those income and expenses back to the year of production that it supported, but as a farmer. And so if I want to manage them, if I'm a beginning farmer and I'm trying to balance out my income so that at least I have a couple profitable years in those first 5 years, I may end up selling 2 years worth of production in 1 year to make that happen. And then the other years I'd have greater losses because I can still deduct all of my expenses. So it's a little bit of a game, if you will, but it's legal, and we do enjoy that as an agricultural community. And so you asked this question earlier, Pat. The size of the farming operation is irrelevant, whether it's a business or a hobby. So size and scale really mean nothing. It's all about, are we managing this as a business? And when I look at the 9 factors that the IRS is going to look at when they say, are you a farm or are you a hobby? And I'm going to outline them here in a minute. We really want to think about, what does this mean to be managed as a business? And so you've got some business training, Pat. And so, if you're giving business advice and you want to say, we want to manage this business, what would you tell them?
Making sure that our records are kept well done.
Absolutely. And that is one of the key things. And so here are the 9 factors the IRS looks to determine whether or not we're a farm. And so excuse me. The first one here is, we're going to operate the farm in a business-like manner, and that's all it says. But what's a business-like manner? We're going to keep records. We're going to document. We're going to keep records of things that we buy for the farm, things that we sell off the farm, income and expenses, and so all of those records, I think we need to keep. And so that's one of the things they look at. Number 2 is the time and effort you spend on farming, indicating you intend to make it profitable. And so if I document that I'm working 20 hours a week in this agricultural enterprise besides my full-time job off the farm, uh, that says, you're spending a lot of time there versus, yeah, I put in an hour this week and an hour next week, and now I really don't know how much time I've spent. And so tracking that time and effort is really, really important to prove that we're trying to make this a profitable enterprise.
Similar to keeping track of your mileage. Is that correct?
Yeah, similar to keeping track of your mileage. If we want to deduct mileage for farm use, if you will, on a personal vehicle, we would need to have those records as well. But this one is specifically my time. How much time am I putting into that? And the other things that we can also put in there is, am I attending any kind of workshops that would teach me skills to be a better whatever I'm growing, a better winemaker or a better grape grower or a better beekeeper. And so, that document all that, keep those conferences that you go to and say, I'm really trying to improve my skills as a manager, and document that. That's one of the things they'll look at. If you don't have that documentation, you really have no proof. And then the other one, is this income on the farm necessary for your livelihood? It may not be when you're starting out. We have a lot of people that have bought a parcel of property, and and they come to our office here with OSU Extension and say, I need some help figuring out how to make money off of this property. And one of the first questions they always ask, how many acres do I need? And again, acres is not the right measure. It's what can we generate with the time you have available? Because if I want a part-time agricultural enterprise, but yet it requires me to work 40, 50 hours a week at it, then I don't have time for my day job. And so it's really a balance. But we do need to show that there is a dependence on income. A lot of people will start this while they're still working off the farm, looking towards retirement, and then we have a cash flow stream in retirement coming off of this farm enterprise. And we see that frequently. Another one that we look at, or the IRS looks at, is your losses are due to circumstances beyond your control. So if you have a loss for the year, a farming loss, was it weather? Was it theft? Was it fire? Did something happen that you had no control over? And that's another factor they look at. The fifth one, did we make a major change in our operation to improve profitability? That could be saying, what, we went away from blueberries and we're now growing apples, which is going to be 10, 15 years before I have a sizable apple crop. They'll take that into consideration. Do we have the knowledge necessary to farm? Again, going back to, are we attending seminars and things that help us become better farmers? Do we have a track history of being successful at making a profit in a similar activity previously? So if you grew up on a farm, that could be used even. Number 8, do we make a profit some years? They're going to look at that. Maybe we've just had a string of poor weather years and now we haven't made profit for 4 or 5 years. They're going to come and question it. But if we have that history of where we made profit before, that will help us. And then also, can we expect to make a future profit from the appreciation of the assets? So we bought equipment wisely and it's getting more valuable, or we've purchased land and structures and they're going to increase in value. They'll take all of that into consideration, these 9 factors, before they declare you're a hobby farm and not a for-profit farm. And there are some protections that we really have out there, and I'll put them up on the screen one time. Have a well-written business plan, complete with budgets, income projections that show for future earnings. That has a lot of weight with the IRS as they come out and look at your business. Document the time, we already mentioned that, and then why the business projections did not align with the reality. And again, we've already talked about that a little bit, weather, theft, economic forces beyond our control.
When we're dealing with the IRS, we of course go to various different tax preparers. Can we go to any tax preparer, or should we sort of hone in on somebody that knows
If
agriculture?
I were starting an agricultural business, I would look for somebody that knows agriculture. Absolutely. Not that it's all that difficult of a form to fill out in terms of the Schedule F. It isn't. But having somebody that understands how the IRS thinks about agriculture, Ohio State University, and there's other places to get education. So I'm not saying you just need to go to one of our tax preparers, but we offer the Ohio Income Tax Schools every year. And we know that group of tax preparers, they get a section on agriculture every year. And so we're pretty confident that they're up to speed on agricultural taxes. Now, that doesn't mean people that don't come to our Ohio Income Tax School don't know agriculture. They very well do. But I would ask that question as you're working with a tax professional in terms of what is their experience with agriculture enterprises and if they feel comfortable doing your taxes. It's not a hard question to ask. They ask all kinds of questions of you. You're allowed to ask questions back. Sure. I mean, in summary, if we're gonna enter into an agriculture enterprise, the old rule of thumb that we used to talk about was we want to be profitable 2 out of the first 5 years if we're a startup. And so, we don't need to be profitable out of the gate. We can have that investment, take those deductions. But if we get into in equine enterprises or horses, they give actually a few more years. I think it's 2 out of the first 7 years is the old rule of thumb. So there's no danger of, if I don't make a profit the first 2 years, I'm in trouble with the IRS. But still, I would approach this that if the IRS ever comes and says, prove to me that this is a business venture and not a hobby, I would want to have the business plan. I would want to have the records of income and expenses. I would want to have the records of time invested. I would want to have the records of how I've improved my skills as a manager and a producer by what conferences I've gone to, what meetings I've gone to, that should in all likelihood make me a better farmer. And I would have all that packaged neatly together in case they ever came knocking at your door.
Hey, we're talking with Chris Bruynis. He's with the Ohio State University Extension Program in Ross County. Contact information is listed below. Chris, thank you.
Hey, thank you.